Hey, hello, good evening. This is Martin from Secrets, the channel for learning about trading and investing. Welcome to quick market analysis for the next day. It's Monday. Remember, we have a weekly analysis that will come on Sunday. So please don't miss out that. If you're not subscribed, please subscribe and click on the bell icon. This is a quick wrap up for what happened today, and then we'll analyze what we can learn from it and plan for a better trade for the next day. So straight to the charts, and then we have the daily candles. Look at this. Right, yesterday's candle was inverted hammer, which indicated there is a trend reversal that's possibly happening. That's really what happened on a short-term basis, and it turned out to be a heavily bearish, wide range bearish candle, and this is the lowest close that has happened since October 3rd of 2022 last year. 5 months lowest close happened today. It's not that great. Banknifty was not that weak, but it didn't support Nifty at all, and then just managed to close about the 200 DMA exponential moving average. It's only good to think. You can see momentum has got some bullishness that is seen there, but very clear give up of all the gains is what you're seeing there. So let's say some breakouts and favors the bears. It's the lowest close in the Nifty in the last 5 months since October 3rd. Index has closed 0.77% and 0.56% down, and 78 is lost for the Nifty. Right, and wide range bearish candle is seen on the Nifty. Even Banknifty has got also a bearish small body candle. Nifty is still below the 200 DMA, far away from it actually. So remember, we have a 12.5% on Banknifty correction from the last 3 months swing high, and then 11% of correction has happened, and it seems like we're heading to the same place. In the recovery of just probably 2% or something that happened in the Nifty. After 5% from the immediate swing high, it's too early to reverse. That's what we can understand. So we are in a downtrend, in a descending wedge. There's no doubt about that. Right? In the short-term basis, we talk about. Bollinger Bands are still in the expansion of the downside, and the bias is bearish definitely because the price is below the median, and it's far away from it. Right? Momentum is bearish, and the Nifty also. And please just manage to hold on that edge of between the bearish and the sideways. Trend indicator is also negative on some other indices. Lower high. That's a pattern that you're seeing. We keep on making lower low and lower high. This time we're making too fast if we are going to make new lower low immediately. Right. US indices are under selling pressure. Even now the Nasdaq, which is showing deep red. So all the US indices measure of the Nasdaq. Dow Jones and as S&P 500, all of them are in a descending wedge, and after hitting the top of the wedge, it has able to climb back to that zone, and then it spent several weeks there, and then after the Fed event, it seems to be falling from there. The price selling is aggressive since the last 12 days. It's just a 60 crore buying that happened not 2 days back. Today it's again 1,720 crores of selling that happened. So absolute no institutional support from the FI side. It's only the IS who are saving the market from falling big. And except the FMCG and the pharma, all the sectors have a bearish momentum as of now, if you consider the top major sectors. Right? And the metal in reality actually fell more than 2% today. Right? Single fall. Lands, Infi, and TCS. These are major contributors to the index. Lands and the IT stocks both are having bearish momentum in the short term, and that's only the heavyweights that you're seeing. So that's again bearish. The rupee is weaker. It's up even though the dollar is showing some fall, rupee absolutely ignores it, and it's climbing up towards the 83.5 all-time highs and all that. So absolute weakness continues. And India VIX, forward dimension. The VIX are short of 5% today, and it's above 15, and it's outside of the lower regime. So most of the things are in the favor of the pace. Few things left for the bulls. What are those? Yeah, we're heading towards a crucial support zone. The bulls may try to defend the place. Banknifty still seems to be little more strength, better strength than the Nifty. You can say it still managed to close about the 200 exponential moving average. And both indices, if you see the weekly charts, you can see that the higher high, higher low pattern, which is bullish in nature, has not broken. Only the short term is lower low. So once that higher time frame also falls into that price action pattern of lower low, then that's going to be a deep cuts that's going to come in after that. So That's very close by 16, 650, 750, the zone for that, right? So that's still book. You can say it's bullish fun, and the bullish fall still below 68 is good, but the weak rupee is, is troubling. Yeah, so crude oil falling more than 50% from the top, nearly 50% from the top. And Banknifty is having more strength. It's having a sideways momentum. It's on the edge of falling into this, and it's a range shift momentum. Range shift is basically bullish in nature. So range shift is like it's a shift in the momentum from these bearish zones to the sideways zones, and if there is a bounce up that happens, that bounce up can definitely move substantially upside. Is what higher the time frame the better. Here this is the range shift, so it is not confirmed. It will confirm if you see a bounce from that support zone of the RSI 60. So that's there. And also the bank, if you have a bullish momentum, which indicates that momentum is falling down and momentum is rising up and price is falling down. So that's a divergence in momentum. It's bullish in nature. If that works out, it's also not confirmed. If it works out, fine. That could be. And so that two things are in favor of the bulls from on the DAX. HDFC Bank Kodak, but the bank stock is still not falling to the bearish zones. That's only good thing that we can talk about, the heavyweights, right? So these are the few things that is in favor of the bulls, but bears dominate. So in a nutshell, what we can say is today and yesterday, what we are seeing is severe selling pressure after the rally, the 5% to rally fall down of 5%. We are not even able to move up more than 2%. So the selling pressure is evident, right? And today, for the first time, it closed below 5-month low, close to close basis, right? So selling pressure and today's bearishness, the candle, the wide range bearishness is makes feel that the bulls are giving up easy, even without a fight, right? The momentum trend volatility, all this in this bearish. That's a view. The judge is selling bearish. There's no doubt about that. There's not too much of research also required, right? So every move is getting eaten out, right? So problem markets are also bearish in nature, as I said. So keep a close watch on those US markets, especially under selling pressure. Then listen, if that is crashing down big, then obviously there's no way that we can hold on to that. So levels to look out downside, 17,250 and 17,500 on the upside. On the Nifty, 40,000, 40,100. On the upside, on the Banknifty, 16,650 and 17,750 and 37,386 on Banknifty. So the levels on the downside. So all that you can do is protect your capital, positions as less when the VIX is spiking about the 20, and stay out of the trade. You don't have to trade all the day. All the days you don't have to trade. Trade carefully, cautiously, and everything falls in fine. And always downside also, if you're doing, you will take call spreads, or if you're non-directional, go for a wider range and have defined hedge position so that you know what exactly you'll be losing. You still be the game the next day. So position size is all, and then focus on that, and then have touch stop losses, and then play safe. Right? And that's my view. We'll have a weekly analysis. Which will analyze the entire week and then have a view for the next upcoming entire week, so that video will be coming on Sunday, and you also may have some weekly stock picks that may come tomorrow. So please don't forget to subscribe and click on the bell button, right? So my view is clear. I hope it has helped you to frame a better playing plan for the next year. And if you're not subscribed, please subscribe and share it to your friends. We need help in this regard. And if you're subscribed, please put in feedback, comments, and all that. It helps us a lot to improve the program and keep us motivated in doing this every day. Thanks for watching. Happy trading, happy learning. Bye bye.